In this video, I'm going to continue my discussion of accounting with accounting lesson number 2. Now, I'm not going to cover major amounts of accounting in these lessons because I'm going to cover that in my FASB statements, but I will cover quite a bit of the basics so that you get a pretty good idea of what's going on. I've had many letters about this, so I'm going to do this the right way. Let's go back to the balance sheet. You have assets, you have liabilities, you have owner's equity. Now, all the money that you chart onto the balance sheet will be done by debits and credits. Now, I know at home debits and credits mean absolutely your entire life, but in accounting it's just stating, well, we put it either in one column or the other. That's basically it. Alright? So, let's talk about assets. When you want to increase assets, you're going to debit them. If you want to decrease assets, you're going to credit them. Okay? Liabilities, it's the reverse. If you want to increase liabilities, you will credit them. If you want to decrease liabilities, you're going to debit them. Owner's equity, same way. If you want to increase owner's equity, you credit it. If you want to decrease owner's equity, you debit it. Okay? Now, what about the income statement? What does that income statement tell you? That tells you what kind of revenue you're bringing into the company. But just because you're bringing a lot of revenue in the company doesn't mean your company's doing good, because you may have a lot of debts that you may have to pay off. So you really actually need both the income statement and the balance sheet to show how well your company is doing. Alright. An income statement kind of works in reverse to that of the balance sheet, and I'll show you what I mean. When you want to increase revenues, you're going to credit them. If you want to decrease revenues, you're going to debit them. Alright. If you want to increase expenses, you're going to debit them. If you want to decrease expenses, you're going to credit them. And the same way with net income. If you want to increase net income, you're going to debit it. If you want to decrease net income, you're going to credit it. Okay? Now, the reason why we do this is because at the end of the month, we're going to decrease net income all the way. And what you're going to do is you're going to credit net income at the end of the month, and then you're going to debit your assets, and then from there you're going to figure out how good your company's going to do. So remember, at the end of the month you're going to credit net income and then debit assets to show how much money you've made that month, and therefore the accounting equation goes through correctly, and bam, there you go. I will cover more about this accounting in a future video, so stay tuned.